Alright, so welcome in. My name's Dancing Dave the Rave, or you can just call me Coops like the rest of my friends do. But I'm going to spend a few minutes talking about these funding firms. I don't like to call them prop firms like they like to self-brand as. I think that's a misdemeanor automatically. There's nothing proprietary about them, and prop firm implies that there's a small group of traders who are working together to leverage their combined expertise. And there's only one or two of the firms that I've found so far that potentially head in that direction. Okay, not financial advice. This is purely for entertainment. I'm not a professional in the industry. I don't work for any of the financial companies we're going to talk about. I'm not affiliated with any of them. And I'm not going to post affiliate partner links or anything like that to any of these companies. Right? So this is purely pure, in my opinion. There's no ulterior motive for me talking positively or negatively about any of these companies. And really, just to be clear, I think you can make money with any of them. I think you can also make money from being booked on MetaTrader 4. If you're a good trader, I think you can pretty much make money anywhere. So really, we're already into the realms of nitpicking. If you're someone that's able to extract money from the markets consistently. I think if you are a new developing trader, maybe you're just starting to get consistent, or you're still trying to figure that out. I think this is a totally different set of questions that you'd need to be asking to what I'm looking at here. I'm purely looking at this as secondary capital to deploy behind the scenes to mirror against my main account to exaggerate profit. Right, off of my existing setup, my existing business. That's all I'm looking to do, is to exaggerate the current books. So if you're starting out, or if you're looking to, get your first startup capital, I think that's a completely different ballgame to what I'm looking at and addressing here. I'm maybe going to cover some things that you can think about, and I'm just going to speak broadly about these companies and the industry. Alright, so with all that blah 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 crap done, I think if you are a new developing trader, I also just think actually it's really important to have skin in the game. And I see a lot of new traders, new money to the industry, going to some of the biggest gurus, that we all know, don't need to name any of them. And they are now, promoting these funding firms. Like the Top Step and the ones like this, and you see, there's one out of 10,000 of those people are getting funded and are pulling out serious money. The rest are just all going to be, hamsters in a wheel cage. Let's be honest. And what you need to think about, as the consensus goes, sure, there's always going to be the outliers, and they're always going to be put on a pedestal and talked about and marketed, actually, the successful traders that do make it with those firms. But if we look at the consensus, where are you most likely to make it, and how are you most likely to make it as a new developing trader? And I would argue the importance of having skin in the game throughout that learning process. It's okay to trade on sim, it's okay to trade on demo, to prove an idea to yourself. But to actually see if you can make money, I think you need to actually deploy money into the market. And I think if you're just going and paying $100 a month for $100,000, I think you're going to have a real disconnect to that money and what it means. You're not going to truly get a feeling for what is a dollar worth, what's a pound worth, what's a euro worth. And it's just my opinion. People can argue that one and have a counter opinion to that. That's absolutely fine. But I just want to state that that's my own personal belief, is you need to go through the hardships of having skin in the game. By the way, if you do, you're going to hear lots of bangs and shouting and screaming. There aren't hostages in my house, just to be clear. It's I just run a part-time creche, so it's just going to be a bit noisy with that. Don't worry, you will get used to my sense of humour at some point. Okay, so we have to address the elephant in the room first of all, which is booking. And if you don't believe me that you're B-booked, go and get funded on one of any of these funding firms, and go and put a resting order in the market on that account, and then go look on a live brokerage and see if that order has actually gone through to market, and you're going to see 9 times out of 10 it hasn't. The order never made it to market. So, and if you don't want to go through that exercise of proving that to yourself, you can simply look on a lot of their websites. So you can hear, for example, on Apex, our performance accounts, note they call it a performance account, PA, live. It's already very strange language, right? We use live data for performance accounts. Okay, sure, of course you do. It's the only way to look at the futures markets. There aren't derivative CFD future products that are going to work through a futures account, right? It's not MetaTrader 4. Initially, they are SIM, right? But you still get paid the same way, and this is because many traders may blow up a performance account quickly. So even once you've passed an evaluation and we're going to move you to a funded account, we're going to keep you on SIM. It's going to be the same fake SIM accounts. This is done to protect the company and you as a customer. And once we see consistency, we copy the trades via API to a live account. This is really, really crucial. This tiny statement in that paragraph is the most crucial statement to you understanding how this company operates. That's all the disclosure you need to understand Apex and how they have a conflict of business and interest against you as a paying customer, which we'll dig into a little bit. Once we see long-term consistency, you are placed into a live account. So let me make this very clear. When you get funded at Apex, your credentials may stay the same, or you may get new credentials, but that will be to a SIM account, just like it is when you're not funded. And you're going to know when they no longer want to perform an A/B on you, because you're going to get new credentials, and then you're going to be logging into a live account, whether it's in TraderVate or any of their other platforms, NinjaTrader. Actually, on TraderVate, you're going to have to log in with a separate login and then click on live trading. Otherwise, you're going to be clicking on sim trading, even though you're trading a live funded account. So all quite confusing and weird, right, to see on the surface. And coming back to this statement, what does this mean? Well, that means that just like many prop firms do in real life as well, they will A-book and B-book their traders. And sadly, the vast majority of the industry is made up of brokers that will B-book you. And this is predominant in the MetaTrader side of the business. So if you're trading derivative products through MetaTrader 4 broker, MetaTrader 5, usually C-Trader as well, the chances are that you're being B-booked. And if you show long-term consistency in those platforms, then their internal, let's call them algorithms and scripts and systems that they're running will eventually A-book you. And if they take a bunch of losses, B-booking you, that's just written into their business as a loss. And as you can expect, most people lose money, so they make money by just B-booking you. And a lot of them aren't even passing your trade through to market to B-book you. They're literally just keeping the trades offline in their own books and just betting that you're just going to blow the account. And so they just directly get to keep whatever funds you deposited into the account. Some of them are more advanced, and they will be running algorithms that will be passing through to market on whether to fade you or whether to go with you. And that's a tricky business. That's also a very, very greedy business. But nevertheless, what we need to understand is the conflict of interest there to B-book you. And if someone is profiting from you failing and you're paying them money, you really want to think about this. You really, really want to make sure that you're going to be the winner in the room at the end of the day. And if you are a consistent trader, if you know that you're profitable, if you are extracting money from the markets on a regular basis for many years, this shouldn't bother you. This shouldn't concern you. In fact, you can grin and smile every time you make a withdrawal request on the off chance that they be booked to you, right? It would almost be bemusing to you at that point. However, if you're a new developing trader, you need to understand that the odds are then skewed against you to fail. They want you to fail, they need you to fail. They're going to profit from you failing. And so therefore, they're going to stack the odds against you. That means when it comes to comms and fees and the business setup with how multiple accounts works and the rest of that stuff, they're going to skew everything in every little place they can to be against you. One of the funny things, I actually blew out my first account with Apex on the trailing drawdown. So I was at, roughly speaking, 103,000 on a 100k account. I have a 6k target, 3k drawdown. I was at about 103,000, so I was up 3 grand of profit. I then steamed into DAX on a position that clearly was too large, but it smashed up into profit, was just about to tag the profit level that I would have needed. I was at 5,848. I was at 105,848. So I was $152 away from target. Price came back on me, back to my entry, actually, which I was more than happy for it to do. I was more than happy for price to come and retest my entry and then smash up to target. And on that pullback to entry, retest of where I got in, they got me on the trail. So yeah, sure. Position was too big, but I was that confident in the trade. I actually opened the exact same trade on a new account with Apex, and the account smashed up to target on that idea. And that second account now, funny enough, is actually here. So if the same thing happens to me now on this point, I'll be quite pissed. So this is also just highlighting cost of business is coming in at 10% for me. This is a very aggressive trading style. I'm basically trading 50% strike on a 2-to-1 ratio. So for every $100 I lose, I'm looking to make 200. There's about a 50% strike, pretty damn close. And just very aggressively, just smashing in. So this is 5 days of trading just to get accounts funded as quickly as possible. But you see here that there's 5,400 after fees and 5,991. Sorry, excuse me, it's the other way around, right? So that's with the fees taken off. This is on the left side without the fees. And so you see there's about $500 there of comms. So around 10% of the overall profit, which should be very, very, very alarming to any of you. 10% comms and fees. So I could speak a lot about this craziness. But first of all, this trailing stop out going above the 100k, right? So the trailing stop actually went to 208 on that account when I was at 5.8. So it's following you up past the 100k, and that's something to think about, something to know. Some of the others don't do that. Some of the others say end of day, but they're still looking at the equity high that you did have in real time, but then only printing that on the end of day. Just all sorts of funky different changes to the perimeters, but clearly Apex are doing that just to catch out the vast majority of traders. And you could actually see on that screenshot, you know, my trade size is getting smaller and smaller and smaller as I'm just being more and more careful getting up to that TP just to preserve that 3k margin onto the downside. And that's just not how I would trade in real life. And so it's actually a very, very bad evaluation for me personally. I mean, who has targets? You don't say this month I'm going to make 10 grand from the market. I mean, you just don't do that for a start. And yeah, I mean, if you're still $3,000 up, right, on the account, you should still be in favour there when it comes to the capital. So whatever, I mean, still my mistake. Let's hope I don't do that again. One of the funny things about that stop out that it showed me though, is that the account just then disappears. You know, if you log out and log back in to any of those trading softwares, any of the platforms, that was Tradeovate, because Tradeovate's the only one that has Eurex, which I'm going to talk about more later as well. Once your account gets stopped out, it just disappears. And I think that's also very, very scammy and slimy. And I mean, it's not deliberate, probably. It's just how the system's set up. But what that means is, you know, if you are burning through accounts and you are trying to figure this out seriously, you're not actually going to have a record that you can go back through to analyze and see, okay, well, how was my trading on that account? Dare I say that? It sounds horrible, right? But when I had that one account, how was I doing? What was my trading like? What could I have improved? The second account, okay, damn, I blew that one out as well. Okay, what was I doing wrong? What could I improve? You can't go and look at any of the stats or the data. So I think as a new trader, as a developing trader, I think that's really shitty. I think that really, really sucks. So just to mention that, there's no way of seeing the account and the history whatsoever. The fixed lot sizes, I think's hilarious. It's one of the funniest things about all of these. And again, there's a lot of Moloch law here of competitiveness, where the different companies are just trying to get one up and basically eroding their profit as B-book white label artists. You know, so like instead of 7 days, they'll do 5 days evaluation, and instead of a 15k target, we'll do an 11k target, and everyone's just trying to edge that against the competitors, right, in just these little perimeters. And actually it doesn't change the fact that we're, you know, still pigs in mud. It's not helping us. So when the entire paradigm is still shit. So if we look here, right, 100k account, let's look at the Tradeovate ones. 100k account, so it says 14 contracts, 140 micros. 14 contracts of what? 14 contracts of wheat, of the buns, of ES, because each of those contracts costs a different amount of money. The margin requirements for each of those contracts vastly changes. So for one buns, it's €1,000. For Euro stocks, for example, versus ES, which is usually around 500. So it's very strange. And the other thing you need to factor in is you need to include resting orders. So if you want to have stop losses or take profits in the market, should do a song about that. In the market, no, you're not. You need to factor that in. So if you want to have a stop and a TP and you've got the open orders, you're going to have to divide that number by 3. If you're just not going to set TPs automatically and take profit manually by joining bid or asks as you go along, perhaps scaling in or out, then you could maybe get away with halving it to 7, including the stops, but you need to factor that in. And what's just really stupid and bizarre to me is just tell us the margin. Because if it's 14 contracts, 14 times 500 would be 7k. But I've seemingly opened $11,000 of margin on my Apex account. So you can see this in the control panel. You can go look at your margin requirements, of course, as you're operating the account. You can have a look, and I see a lot of discrepancies. So I'm actually going to ask the people at Trade Day to explain that one to me, because they're all doing it. You know, if we come down to Trade Day, here we go. So they're mentioning the lot sizes here. Same down here is the contract sizes, lot sizes, and they all vary a little bit. Now, one of the other things to think about with them stating the contract, the number of contracts, is if that's fixed, that's really prohibitive or against you as a trader from growing an account, right? So you start off with 100 grand, you grow it to 150, then your size should increase, right? You want to be taking more risk and you want to be growing an account. You want a nice exponential growth on your account, and that's not going to be possible if you can't scale on the account. Now, obviously with Apex, what they're saying instead is, yeah, sure, you're fixed, but you can have 20 accounts. So that's how you scale. So you do $1,000 a month, but you've actually done 20 grand a month because you've got 20 accounts. Now, obviously, I don't need to state why as a kind of, I don't want to use the word sketchy or nasty, but as a business model that's kind of against you as a new or developing trader, promoting that you have lots of accounts is pretty dangerous, in my opinion, for obvious reasons. Right? So again, if you are consistently extracting money from the market, it's a different story. That will actually work to your benefit, or it could work to your benefit if it fits the rest of your business and your style. That's fine. You could actually scale with one company and have 20 accounts. Have a couple of million on the books with one company. Not that you'd want to probably have that much risk undiversified, but you could, in theory, scale pretty big with Apex. But if you're a new and developing trader, I think what that's going to promote is that you are willy-nilly just burning through accounts, and you're just trying to get lucky on them all. I mean, just before, I'm sorry to say this against Apex, but just before Christmas, they came out with a promotion called 80k, where they said, hey, look, go and buy 20 accounts from us, and we will do one-day evaluations. So we will pass your account through to a funded live PA account, performance account, as they call it, after just one day, if you met the target, the TP. And then if you trade those 20 accounts and you make 80 grand in January, you'll potentially win the competition. We'll select one person to win 80k, so we'll double your money. But this was days before Christmas. Traders have a tough enough time as it is, and tough enough life, mentally, psychologically, without a company trying to promote that you don't spend time with your family and loved ones and friends over Christmas, and you don't rest and recuperate, no pun intended, for the new year, and instead you steam into the market and try to get lucky. I mean, how many people would have just blown accounts trying to get lucky in the last days and then had a really crappy feeling over Christmas? So just my opinion, but I think that kind of shows the ethics of a company and where they're coming from. So again, just my opinion, but be careful about the fixed lot thing nevertheless, because it could still catch you out. If you think that you're going to get one account funded at Apex, and then you're going to trade that up to millions, well, no, you're not. You're going to be fixed contract size forever on that account, right? So it's promoting that you withdraw your money, and we can see that when we actually look at the withdrawals on Apex's website, which they list. So apparently these are real. I've got no way of really contacting these people. I guess we could try to really try to validate some of this list, but you can see that I'm on page 19, and we're only back to the 17th of December. So there's pages and pages and pages and pages of this stuff. And this is just an example, right? So there's this legend called Halliday, who's done 2 grand on each account. He's got 20 accounts. So he's done 40 grand that he's withdrawn. And I think that's a good example of scaling that works. You can see here, this person's trading clearly different size across the accounts, but still, stacked stacked a decent number of accounts there. But here's what's interesting, because there is pages and pages and pages and pages and pages. Here we go. Here's another one. Look, Berin, and he's done 2,750 per account. That looks like 20 accounts to me. But what you also see is just pages and pages and pages and pages of where someone, each person has just withdrawn like $1,000 or $2,000, $500. But you know, it's like there's just pages and pages and pages and pages where people were just withdrawing 1,000 or 2,000. But what you'll notice is that most of the time they are stacked. So like here again, look, Brazil's done 1,000 20 times probably without counting. There's another 20k. So you see that a lot, right? But it's interesting that you can go and see that. I just think it's quite fascinating to me. You don't see very often someone withdrawing, 200-300 grand. There are those. If you go back through November, you'll see someone's withdrawn 300k, 250k. It would actually be worth you extracting out all of this data using ChatGPT to reformat it and stick it into a spreadsheet, so you could actually look at it nicely and look at sort of the median and the average withdrawals, look at the maximum. But it's also, tax authorities, it's paradise for them. I mean, everyone's surnames are listed. So, if you are going to trade through Apex, just be aware that your name is going to show up here. Now, that's great for bragging rights, if that's your thing, but just be aware, obviously, depending on your financial infrastructure, but you want to consider that your surname and all of your payouts might be listed there. So sometimes the bragging rights just aren't worth it, right? And if we look at FTMO, so this is really life of accounts, and you see that this is the top accounts, the rest are grayed out. If you log into FTMO, you can actually see how much people have made across them. And you can see the top account, he's done, 52%, but on a 400 grand account. So he's up 200k. The next one is at 141,000 profit at 35% gain. And then we drop off significantly already to 57,000. Some are in dollars, some are in euros, worth noting. And I've looked at the full list. I've logged into FTMO as a customer and had a look, and it drops off very quickly. It goes like 40, 40, 20, 20, 20, 20, 20, 10, 10, 10, 10, 10. So there's not that many people at FTMO actually making money, and I think that's very, very interesting. And the difference between FTMO and all the other ones that we're going to look at is FTMO is in the bracket of MT4 derivative B books. I think there's probably one or two of them that do pass through to market, but just remember that if you're trading MT4, you're going to be B booking through their systems. And again, are things skewed against you? You've got spreads and comms and fees to consider over there. But why aren't many people making that much money over here on FTMO? It's very, very, very interesting to me. Something to consider. Someone today said, hey man, you shouldn't just think about the futures. You should, because you're limiting yourself to going and getting, millions of bucks on the books. I'm just not interested in working with MetaTrader 4 at all. Been there, done that. If you want to put on more than 20 lots per trade, sorry, excuse the banging, it really is very, very loud here. You're going to start to see all sorts of shenanigans. I've had too many shenanigans with those brokers as well in the past. Sometimes they've honoured my withdrawals, sometimes they haven't, sometimes they've made up all sorts of excuses. I've just had too bad a run-in with that side of the business that is set up to B-book the traders. And I'm just trading Eurex. It's like 90% of my business. I am on CME, do trade CME, but I'm really looking to predominantly make Eurex my primary business. And so, again, these are just my thoughts, right? I'm just spewing everything out loud, really, really am. That's FTMO, that's quite interesting to think about. Okay, next thing, comms and fees. In fact, let me come back. Sorry, I'm just going to jump back to the scaling of accounts and the fixed contract sizes, because Apex, you can have many accounts with them. Chances are they're going to B-book you, but they're going to limit you to $5,000 a month for the first 3 months of withdrawals, and that's their opportunity to figure out if they should be B-booking you or not. That's the reason why they would have the 3-month limitation, right? Maximum withdrawals. So if someone steams in and does a couple of $1 million in the first month, they've got you on a maximum withdrawal, and hopefully already within that time they had enough time to start passing you through to market or to switch you to a live account. So, but they do have risk there. I think it's unlikely that they get caught out, but it's possible. I definitely think they do have risk there. Trade day, you can only have one account with them, because it's a live account. So they're literally going to open a live account for you, so you know that you're not trading against them, which is great. You can trade against them for $5,000. They will keep you on sim once you've passed evaluation, if you want to be, because there's less fees associated with staying in sim. But maximum withdrawal from them, is going to be $5,000 on sim, and then they're going to force you to move over to a live account. I've spoken with the co-founder. I've forgotten his name. Sorry for that. I've got a feeling it's Steve. I could have got that wrong. It's probably here somewhere, isn't it? I'm sorry. I'm so sorry for forgetting your name. I'm really, really bad with names. Meet the team. Let's meet the team. James, Steve. Yeah, so I think I spoke with Steve. It's just by email. Didn't chat to him on the phone, but they have told me that they will scale your account. So you can only have one account, but for every $2,000 of capital you add to the account of profits, I think they add an extra contract. Something like that. There's some scaling metric automatically, but then additionally, if you take a 50k account to 100k, or even before that, I think they're probably going to have a sit down with you and a chat and say, hey, look, you've been trading now really, really well consistently. You've been on the books for 6 months. You've been on the books for a year. I don't know, right, what the actual conversation will be, but they'll probably chat to you about increasing your margin and account beyond that automated scaling system. So they have the power on their back end to work with you individually, and I think that's good. The same for Apteros. I'm just wondering how to pronounce it. I'm probably saying it wrong. This is the best looking company I've got. Now, Trade Day look really good to me, but I'll talk about their problems in a second. Apteros looks like the best, and I'm very interested to find out which broker. I know which broker they're using, actually. I just saw that on the text, so I need to investigate that. I've literally just found this one thanks to Umar from X and Twitter for pointing me in the direction of these guys, or this guy. This one looks the most interesting to me, definitely, because there's a few catches that they're a bit cheeky on, to be honest, but they have full Sierra and Eurex support, which is becoming harder and harder and harder to do. So here was my investigation up to this point has basically been Trade Day, Take Profit Trader, and Apex. I'm with an account holder with Apex and Trade Day. So those are the two that I'm with now, and I'm just looking at Take Profit. I'm not gonna go with them. I'm gonna investigate Apteros a little bit deeper in terms of due diligence, and then very interested to jump over there, because Sierra Chart and Eurex would literally allow me to do what I said at the very start, which is deploy secondary capital mirrored behind the scenes to my existing trading and setup. That's exactly what I'm looking to do. And they're only going to pay out 60% Apteros, but that's an additional 60%. It's better than nothing. Excuse the dog. So I also think that's kind of interesting, but I'm really jumping around the topics here now. But just to mention, Apteros will scale you, and there's no limit on the upside to the account size. So the dog that runs this account, he basically has a couple of partners, a couple of investors, and again, there's limitations and problems with that, such as you only get quarterly withdrawals and all sorts of other bits and pieces here. But long term, I think that's a company I might wish to work with, or a person I might like to work with. So they will scale. Yeah, I don't know what else to talk about here really. Let's just perhaps summarize. Like, this is just my opinion. I think if you're a successful trader, going and getting 20 accounts with Apex, if you can make it work for you, I think it's great. I think as a new or developing trader, this should not be the option you go for. And it's very alluring, it's very sexy. They have 90% discounts all the time, and you're going to be able to get 100k for 20 bucks, 25, 27 bucks. You're going to be able to get 100k. Who is not going to sign up for that, right? That just, to someone without capital, to someone who needs capital, that's just way too attractive, right? To say no. That's very, very alluring. But what you need to think about is you're probably going to sign up for a bunch of those accounts because it's so cheap. And if you're trying to get consistency and profitability, if you're trying to get over the hill as a trader into the promised land, you're potentially going to blow a bunch of accounts. You're potentially going to trade it very trigger happy. You're just going to be very slap hazard about it in Apex because the accounts are so cheap. You're not going to get any real feeling for what a $100,000 account actually means. You're just going to be thinking about the 3k drawdown. Right, I've got $3,000 and I've just got to make 6. Let's steam in 5 contracts on NQ. Oops, I've stopped out again 6 seconds later. Oh well, fuck it, I've got another 3 accounts, let's try again. And I just, I've seen many retail traders trading live, and I think that's just going to promote a gambling mentality in the worst sense of that word. Right? Again, just my opinion, but I don't think you're creating a environment that's conducive to success. I don't like to use that word because I know other gurus and furus do, but you do have to think about the likelihood of you succeeding in each environment. They do have Eurex. They have 2 account flavors, but ultimately, if you look here, it says TraderVate Ninja Trader. Scroll down to the next account. Sorry, this one says, oh yeah. This is Rhythmic Ninja Trader. Look at that. And then here it says TraderVate Ninja Trader. Now you can get Eurex through TraderVate because they have a backend set up so that you can get order routing through to Eurex and the charting data directly through TraderVate as an extra add-on. It's going to cost you 20 odd bucks, 23 bucks I think a month, even when you're on evaluation accounts. But you're not going to be able to get Sierra charts set up any longer through any of these accounts. You can try and you might get lucky, but basically anyone with Sierra chart running through the CQG, TraderVate, Ninja Trader accounts have been grandfathered at this point. In fact, if you go on to the Sierra chart forum, the admins for Sierra chart are actually laughing because TraderVate make the statement that they will no longer set up CQG accounts through to Sierra chart. And they're laughing, saying this is very, very, very good news for us. We no longer have to support you idiots. Typical Sierra chart admins, right? It's absolutely hilarious. What you need to understand, and I'm jumping around points here, what you need to understand with both of those account types, you are clearing through Ninja Trader, or you are trading through Ninja Trader as the broker. And so you need to understand the cost of doing business with them. And that's here. very, very clear. You're looking at 258 a round trip for a standard full-size contract, right? Now, you're looking, so by the way, that's very expensive if you don't know. $2.58 a round trip is pretty bonkers, and that's going to be factored into your evaluation, right? Those comms and fees, like I showed you earlier on my chart, are going to actually erode away your profit. So making it harder for you to get to the target. Now, here's the really insane thing. 35 cents aside, so 70 cents a round trip per contract, per micro contract. So you're looking at $7 round trip. Really sorry for the noise. If you're going to trade micros, right, on these accounts, and you trade 10 micros, the equivalent of what should be the equivalent of one full-size contract, it's going to cost you $7 versus $2.58. And that's why you see my cost of doing business on that account, I was very aggressive in 10%. That's exactly the reason why. Now, you can pay more money to NinjaTrader. I don't think you could do this on an evaluation account, but I think you can do it for the paid accounts, the funded accounts. I know you definitely can do it for Trade Day because they talk about it. I'm not sure for Apex, but you're looking at $100 a month. Okay, you've only got one account of Trade Day, and for Apex this would cover all of them on the master account because they're all in one. But really, that doesn't help you that much. So really, you need to be spending $1,500 to reduce your comms and fees to what we would class as okay in the industry, and that's still not great. So you've got to factor that in. Factor that into the evaluation, first of all. $7 for trading micros for a round trip. Factor that in, and just bear that in mind, and also think about that when you're coming to choose which company, because again, if you're profitable and consistent, you can just accept that, but as a new developing trader, that might be the thing that prohibits you from getting somewhere. Just to mention, that's actually so you're going to have the same problem with Trade Day. Trade Day are still routing through NinjaTrader. They're just giving you a live account, and you can tell that because it's all just TraderVate, NinjaTrader crap still. So basically what NinjaTrader have done is they've realized, because they're a broker, they didn't always clear themselves. I think they went through Dorman, as Nigel was telling me the other day, but they clear now themselves. And what I think they've probably realized in the last years was, hang on a minute, the industry's changing. There's a lot of people now who are not going to open full broker accounts. They are going to instead open these funded accounts, these prop firm accounts. So us as NinjaTrader, we're going to lose out on a lot of business as a brokerage. How can we try to capture that market back, or try to keep some of that market retained for us that we're going to otherwise lose? Okay, let's create a white label system that allows these small companies and outfits to basically set up their little prop firms, their little funding firms, and then we're gonna clear everything through us. We're gonna route everything through us, and they're set up well to do that. They have NinjaTrader. I don't know how the alliance is with TraderVate, but I would guess it's either the same company or it's very similar, partnered, closely partnered somehow. It's always TraderVate and NinjaTrader. TraderVate is routing through NinjaTrader and clearing through there. Their comms and fees are identical. If you look at TraderVate's pricing screen, it's literally the same as this. So clearly there's an alliance. I don't know what it is, but you're going to be paying those comms and fees, right? Just to end on that point quickly. If he says quickly, 45 minutes into the chat. Now look, Trade Day, I think are set up quite nicely, and I think of the crappy setups going through NinjaTrader, with those high comms and fees, I think they're probably the nicest. They seem like the stage 5 guys of the industry. They're not greatly competitive. They're not like really competitive in the market when it comes to their costs and fees and their all the different perimeters, but they've got great customer service. It's 2 guys. They're really nice to work with and chat with. They're very attentive on email, and they still want to see you succeed. That's why they're doing live accounts. So again, I think it's worth considering as a starting trader, trader trying to make it, developing trader. I think it's worth considering them for sure. This company, I just really, again, it's exact same crap. It's NinjaTrader white labeled out. They've skewed some of the numbers and the metrics again, but ultimately, you know, it's this one guy. He claims that he's, you know, I'm just one of, because, you know, there's a lot of people working on this to make it all happen. It's just one guy, right, who's set up this company again. And so you need to think, right, like, what's the business here for you as a new trader? Why would you give your money to this person? And like, what's the benefit? I mean, they've just been smart enough to set up this company to try to capture you, to try to get you in. This is surely, like, just on the surface, if you take a logical step back, hang on a minute. This is just a modern day version of booking from MetaTrader for referring brokers. This is just a referring broker. That's literally all it is, an IB, an introducing broker. They're not even an IB. They're not even doing, it's a referral, and they have a back end and a fancy system that looks like it's them, but it's just white labeled to NinjaTrader. And I hope people really realize that and recognize that. This might be a great company to work with, and if it works for you, great. I'm not here to slander anyone. I think you can make money with all of these companies, so please don't get me wrong. Yeah, and then the fourth one, Apteros. This one is most set up to be a prop firm. I just wish it was more than one guy at the top of the food chain here. I wish that was literally a small team instead of, again, it's the same story. It's just one guy who's come from SMB, CAP in New York, I guess, and now he's set this up. And I just wish there was 4 or 5 of them at the top. I wish it was a kind of a Futexy, Axia group of traders, because again, it's just one guy sat there, and I just feel the risk there. You know, I just want to diversify across a team. I want to be in a team. I want to be part of a team when it's a long-term relationship I'm looking to build. And so when it's just one person, anything can happen to that individual. They could get sick, they could have more kids and need to put their focus somewhere else. And then what happens there? And those aren't necessarily bad things, right? You can. It's not to say you're not going to be able to get your money back from them or something like that, but it's just to say, if you're going to invest the time getting set up and working with someone, I'm just looking for that security, right? And hey, I'm still going to check this out. I think it's the best looking, the best sounding. Also, just because they're offering Eurex. Now, a couple of cheeky things here. They're going to keep 60%, or sorry, they're going to keep 40%. I think you get 40%. Yeah, but doesn't mention here. But you can keep 100% of your first payout up to 100 grand. But be careful, that doesn't mean you're going to get the first $100,000. That means you're going to get the first payout amount that you request from them, 100% of that. But what if your first request is 5 grand? Then you're done. Then you're going to be down to 60-40 split. So I think it's you keep 60, they're keeping 40. Prop desk, I don't know if it's on here. Yeah, it's going to be here, isn't it? account perimeters, 60% profit share. Okay, so 60-40, which is really, you know, you need to factor that in, but it's true what they say, there's no limit on the upside of capital, so they might end up giving you, that guy and his partners might end up allocating you 5 mil, you know, and then 5 mil is better than having 20 counts at 100k. So I don't know, just factor all that stuff in, just think about that. Yeah, see, they've done exactly what I was just talking about. They've worked really hard on their comms and fees. So this is, you know, absolutely to their credit of Apteros. They've got actually very competitive rates on their comms and fees. They also have the possibility to pay $500 a month and then be on TT. Yeah, I'm losing the capacity to talk, as you can hear. It's great to fall asleep to, probably me rambling on at this point. What are some other things I wanted to mention? What I thought was a little bit cheeky here, to be honest, and let's finish on that one, because I think that's quite funny. Yeah, look, sorry, so they're doing 120, right? So that's really to their credit. That's very, very good, because over the span of a year, that really, really adds up. And it is going to impact your evaluation account as well. Another thing I also like about Apteros is they'll do 30 days. So you need to prove yourself over 30 days, because 5 days, 7 days of trading with all the other companies, I'm sorry, but like absolutely anyone is going to be able to get through when you're only charging $20, $100 for an account. You just have to run the numbers there. Like, a huge amount of turds are going to get through. They're just going to be smacking accounts. They're going to get lucky on some swing, on some move, on some pullback. They're going to get accounts funded. So just really like think about then like how that business is going to have to run their business when there's so many turds potentially getting through and being funded, quote unquote. So something else to think about. The thing that I thought was a little bit cheeky here, and I just think there's just no need, because I really start to feel like I want to trust this company on the surface of everything that the guy's written on his website. He's really trying to create a prop firm atmosphere where he's trading with people. I'll come to that in a second, what they're actually doing, but look at this, it's $300 a month, so much more expensive than the other companies, but you have to trade for 30 days, right? Sorry, the bagging is really insane, but there aren't 30 trading days in a month, are there? So if you get that thinking, yeah, well, I'll probably get the account funded within a month anyway. No. So the minimum is you're going to have to spend $600, right, before you'd even potentially get funded with them. So just factor that in. You are going to have 2 months of payments to Apteros before you get funded. I just think there's no need to not clearly say that, because I just think it's deliberately misleading. How they've written that out, because you read it as, 30 days and you're thinking a month, and you think, oh yeah, it's $300 a month, okay, I'll be funded in the first month. The profit is also pretty high, so yes, you've got that long period, so it should be absolutely fine, but just to mention, you've got 10 grand targets, 4 grand on the drawdown, 1,500 on the daily. So for a developing trader, for a new trader, that's not an account for you, definitely. That's for someone who's already consistent and you're just looking to partner up with someone to extend your capital, secondary capital. That's my opinion, but I'm very strong on that one when it comes to this company. I think you're probably going to be looked after, and in fact, something that's quite interesting is, I don't know where I saw this, I think it was in again, it's very confusing because there's the FAQs, but then there was also there was like another help desk that you can get to somewhere. No, that's still this one. By the way, if you want to trade Sierra chart with these guys on evaluation, they're actually suggesting that you go to EdgeClear. I don't know why, because that's not their clearing firm. That you actually have to go and get an account with EdgeClear, which means setting an account up with Dorman or someone like that. Getting an you're probably going to have to get a funded EdgeClear account, and then you can go and sign up for Sierra chart and the Denali feeds and all that stuff just to trade evaluation. So I wouldn't do that with Apteros. I would basically trade using whatever they give you, which is our trader, so Rhythmic Trader. Basically just jump onto that one, and away you go, and then just get funded with that. And then once you're on a live account with them, then you could jump into Sierra chart or go straight onto TT if you wanted. Spend the $500 a month for them. Yeah, look, I really am just rambling on, but it's interesting business. At the end of the day, I just really think you want to think about if this is secondary funds for you. If you're a developing trader, be very, very, very careful, in my opinion, who you pick and choose to focus on to begin with. You know, don't think about scaling and having 20 accounts. In my opinion, it would be better to go for the company that's going to look after you and develop with you. Sorry, jumping back. I know I'm all over the place, but I've been chatting for an hour here, so just bear with me. I wanted to say one last thing on Apteros. I'm never going to remember that name. It's a really bizarre name. Apteros, on one of their pages, he says actually that he wants you to join a daily call at 11 a.m. ET, Eastern Time, and actually do like a market outlook and meeting with him in person with a group of people. And then you actually have to deliver a trading plan to him. And then at the end of the day, there's a review. And I think that's every single day. And he expects you to show up for that. And you actually have to give him a very good reason why not to show up for that. Again, like, I think that's fantastic. I think if you're a good trader, that's just going to keep you accountable. In the long term, we all go through funny patches. And I think that's quite a nice thing. But again, you've got to factor that in. If this is not your primary job, you know, how are you going to manage to do all that kind of stuff with Apteros? And again, I had to look at the name. I think it's great, but there's pros and cons to that. You have to see if it fits you personally, right? That actually segues me on to the final conclusion, which is the funny thing here is most people want to do trading so that they can quit their day jobs, right? It's the dream job is to quit my job and just be a trader. But then you're going to go work for one of these companies where you're just back to where you started. You're just deferring, you know, working for someone else to one of these companies. You're just going to be making them money at the end of the day. And they're going to be imposing all these limitations on you, all of their own rules. Go and look at the rules on Apex. It's insane. From trailing drawdowns to 30% rules. You know, if your withdrawal request consists of profits that were made 30% or more in one day, you can't make that withdrawal. You have to carry on trading before you can make that withdrawal request. Like, there's just thousands of rules. And then, by the way, they don't want you scalping. They don't want using automated systems. You can't trade the news, and you have to close out at the end of RTH, at the end of the New York session. You can't carry trades. So, like, all of these rules are going to be imposed on you. And by the way, and this is really not talking about Apex, this is in general, any of them are going to be able to close you down and keep your money without much recourse. Sure, you can try suing them and have legal battles, and I'm sure you would have to go to those ends. But they are going to be able to just make up the rules as they go along. And you can see that's evident on the Apex website. And sorry to highlight them so much, but I think they were probably the front runners in this industry for getting the biggest first, by the looks of things. I wouldn't be surprised they've got the most amount of traders on their books. And I'm guessing there, but you know, especially when it comes to the futures stuff anyway. And so they've had to learn a lot for probably the others as they've gone along. You know, to me, one of their posts on their blog at Apex, it really looks like someone who's in charge of risk at Apex has done their butts big time, and they've steamed onto the blog and written a big post about 30% and withdrawals, and we're not here to facilitate gamblers and people who are getting lucky. And it's all like weirdly hyphenated, and the paragraphing and punctuation's all out of whack, that like it really feels like they lost a bunch of money by A book, B book systems not working as they should have. Someone's come through, got loads of exposure and managed to get lucky on the B books, and as a result Apex have gone and written this massive article, blog post, changed their rules. But the point is this: on the Apex blog there's all these rules that are written which aren't written in the terms of service. It's now just added to their blog that you need to read carefully and understand. You need to read every single blog post on Apex's website to know the conditions that you're trading within, and what other ones are they going to add or change. So if anything happens to the company or to you or to their B book or anything like that, you're going to be the first one to suffer. You're going to be the last one in the queue to get your money out of that company. So just, again, really think about that, and have that considered. I've been rambling on here for over an hour now, so I'll go hit the hay. But I think there's a lot of room for improvement. I really do. I don't blame any of these companies. Like, I'm not speaking negatively about any of them, to be honest, because most traders are failing. B-booking isn't anything new. Most of the industry comprises of that when it comes to retail. I just think there could be more of a prop firm setup being created and curated here. I wouldn't be surprised, even with Aptos, when I sign up, he sends me a Discord link. Something I'm not in favour of. I'm not a fan of Discord. At this point, it just feels a little bit messy and cheap. Just cheap like the budgie. I don't know. That's just my opinion. Lots and lots of people love Discord. I know, but I would like a closed elite environment that I can thrive in with just a few other top traders. I don't want to be in a room of 100 people. You can't benefit, you can't cross-pollinate market-generated information from 100 people, but you can from 5. When 1 or 2 of them are trading the same products as you. The rest might have a broader view or thesis of the market and direction on a day-to-day basis. And then 1 or 2 buddies who are literally on the same product as you. And I think that's kind of the sweet spot, in my opinion. And you know, the bigger that grows, the harder it is to disseminate real-time information to each other and to benefit from it. And that's, again, my humble opinion, but from working with groups of traders of all sizes, that's kind of where I feel like the sweet spot is, just to really create a small, dynamic, small group. And you could have a big company of 1,000 people on the books, but split them up into small groups then that work together. I still think there's a lot of potential in this industry to create a framework and a system of remote prop firms, and maybe prop firms even then the wrong word. Maybe there's nothing proprietary about them, but these small groups that collectively work together in pods, I think there's a lot of potential to be had there still. Okay, I don't know. I'm just rambling on. Take it easy. Peace out. Have a good slide into the new year. Take care.